Hello, this is Cryptolyze. I hope you are well. This Saturday, 30 December 2023. We are going to end the year together with a question that you ask me very often and moreover that you all have in mind. It is how to do X100 in this bull run. This is going to be the question that we are going to address at length, across the board today, and certainly with a lot more tomorrow. How to do X100 in a bull run? That's really the most important question, which remains in the minds of many people. And it's a bit borderline on everyone's dream, the dream of making big multiples. For several reasons: to have financial freedom, to simply get a big gift behind, or to be able to buy a house. Or to simply change the paradigm, it means moving into another asset class, generating enough income to move on to the next stage. And that's a little bit the reason and why I'm making this video, because it's to give you the keys to understanding how to do an X100 in a bull run. There's going to be a part that's going to be on cryptos, a part that will be more psycho, and also at the same time the general understanding of how to make an X, because in fact it's relatively easy. You just have to understand the risks, and how to manage your risk management in relation to all that, and understand that it's not so much the multiple that matters, but it's really the purpose. The purpose, whether it is 1x10 or 1x1000. In fact, what we want in the end is quite simply to have a maximum of dollars. And what is important is to know how much you need and what that you are really aiming for at the end of this bull run. This is what is really important, because you have to understand that this dollar here is very simple. It is linked to something of a very simple equation, which has already been explained several times, which I have already given on several occasions. Who goes? Be the gain which is equal to the capital. Therefore, what you are able to make available to be able to invest, multiplied by the return. The return being the multiples, the capital being how much capital and therefore dollars you have to be able to invest. It is this yield, this accumulation of these two, which will give your gain. And what is your gain? This is generally the end goal you want. Is it 1 lakh? Is it 10,000? Is it 500? Is it, why not, 1 million euros? And at this moment, what is your capital? What is the yield necessary to be able to achieve the gain you want? And that, in fact, is the initial line of thought of what you need to understand to go further. And we must even go further. There is a whole psychological part that will enter into this reflection. We must understand that someone who will have a capital of 10,000 euros and someone who will have a capital of 1 million euros are not going to have the same psychology, are not going to have the same risk management, okay? It's always the same principle. If, to give you a very simple example, if you have 500 euros and you do 1x10, that represents 50 euros, okay? So on that, you have mobilized 500 of capital for a return of x10, which gives you a gain of 5,000. In fact, it is 4,500. But in short, it does not matter very much. It is a total valuation of 5,000. Okay, now someone who has less means, so who will have 50 euros is the equivalent of making an X100. He will have the same pecuniary gain behind, and that is what is important to understand. That is that the person has in fact reduced the capital that he has positioned to increase the risk value and gain the same thing. And on this, it will be really important to understand this because it is the key for the future. If we want to go a little further in this notion of risk management, and this is where it will also be very, very important. Is that on the next bull run, the top 10, so it is? I.e. BTC, Ethereum, everything that is in fact top 10 will manage to make X10. Do you manage to have a BTC at $4 lakh on the next cycle? Can you get Ethereum to $20,000 in the next cycle? These are questions you need to ask yourself now. Clearly, I admit to you that already, if we are more on a notion of X3, we will get there. X3 or X5, depending on the different assets which are in the top 10, we already have a very good valuation, so that implies that very simply we just need to have capital to ensure a return, which will allow us to be able to directly produce a maximum of gains because we will have done 1x3, x5 on a dose of risk, which is minimal. So minimal. Everything is relative, which is minimal compared to all cryptos. On the other hand, if we want to look for X10 that is already basic, that implies that we must look at least in the top 50 cryptos, or even potentially in the top 100. So this already implies that we are going to look for market caps, which are what we call not small market caps, but middle market caps. So either big or middle market caps. But so that means that here we are going to look for cryptos which already have more risk behind them, have not yet exploded or have exploded for the first time, but in this case have not managed to make new 88ths. That is in fact the typology into which we are going to enter. We are going to increase the share of risk. And on that, it's the same principle. A lot of people say yes, but at that moment you just have to dissect your capital into small pieces and look for risky elements. I agree with you, that is to say that if you have in fact $500 and you make $50 x 10, so you multiply by 10 entries on cryptos to try to make an X100 on each. It's a good principle. But it also implies that you are leaving due to the fact that potentially on the X10 you will have perhaps 9 which will be completely rotten and only 1 which will accelerate upwards. And the question is the only one that will accelerate upwards. The goal is actually to maximize this yield. Because if I only have 1 out of the 10 that works, and I am an X100, that implies that I just did X10. It was enough to take 500 to go for something that is less risky and to do X10. So we are in exactly the same typology. And that's why the profitability ratio linked to that, it is linked to something very important. It's simple. It's to be able to earn returns with a breakup of your capital in this style. This implies that you must have at least 2 out of 10 cryptos to be able to make an X20. All right? Same principle. If you are at 3 on 10, that means you are at X30, etc. So in fact, your ability to determine if the crypto is interesting enough and therefore has enough potential to be able to explode upwards is going to be decisive in increasing your multiple depending on the risks you take. So this is a methodology to be able to move towards the X100. It's not about doing X100, but in any case, it's about managing your risks in relation to your entire capital to be able to make your multiples. However, once again, I remind you, the notion of multiple has very little meaning. What is important is how much you need, how much you want to get out of this bull run. If you don't have a target, if you don't have an objective, it doesn't work. Why? Because we will certainly see it tomorrow, but in taking profit, you will have to be able to sell and not be too greedy. This is why you have to have an objective. Know exactly how much you want to come out with so that you can maximize the profit-taking, maximize the risk-taking that you are going to do to aim for this objective. And then even once again, that means that capital is an integral part. Okay, I remind you that it is capital X return. This implies that behind if you want to stay at 1x10 in risk management and your gain is, for example, 1 lakh euros, okay, you want to reach $100. Well, at that point there, it's very simple. You know that there you must have 10. So that means that you have the possibility of being able to generate through your cash flow. If you ever have a cash flow, if you ever actually have a business, or if you ever have money that you are able to generate and continually reinvest, that's what you're going to operate from. So once again, the percentage is just a way to get there. The important thing, in fact, is the amount in which you want to come out. Well, let's admit, you definitely want to have 1/100 to have the possibility of potentially making 5 allocations, 10 allocations, 50 allocations on cryptos, which have a potential to make 1/100 or even why not 1/1000. It's not going to be in the top 100 that we're going to have to look for. It will be in the market caps, which are generally between 200 million and less than 200 million. The more you are in a market cap, which is weak, the more you have a margin for progress, which is rather logical because precisely here we have a market cap, for example, of $200 million, which potentially can quite easily reach 2 billion in the middle of a bull run. It's something that is done very easily. So here we are talking about an X10. Okay, what would it take to make an X100? It's 20 billion. 20 billion is already a little more complicated, but on the other hand, it is very likely to be able to make an X50 because we will get to 10 billion. And at that moment, you are not going to aim for the X100, but all in all, you will perhaps be at an X80-90. And this is where, in fact, you will have to look for small markets cap. And this is where I'm going to give you some examples. If we return to our, here, view of the total market cap, what will be interesting? It will be to look at the total market cap, therefore which represents all of the cryptos, yes. But I will give you 2 examples. An excessively small market cap, which I have already presented to you. When we talked about the notion of RWA, therefore real-world asset, which is the notion of tokenization, We see that we have, for example, the Rio, in which we have a supply in circulation which is very low. I completely agree. We are less than 10. On the other hand, we are on a brand with a diluted cap, therefore which takes into account the totality of the liberation of Rio at 29 million, less than 30 million. Understand that here, when we see a diagram like that, it implies that arriving at 300 million is 1 times 10. Arriving at 3 billion is 1 times 100. On something that is related to RWA. This is a concrete example of cryptos that are given several times, whether directly on the Discord, whether around videos. And that, for example, is one of the projects that could be interesting. And we clearly understand the risk that is linked because we have a small market cap, so that means little volume. That means potentially less capacity to be able to absorb the volume of transactions, and therefore behind having can be more volatility. But that also means that the project itself is being created. So that means that we don't exactly have visibility on the actual evolution of the project. We understand the risks linked to that. Another example, we could take an example which is a little less strong, which could be still, in which we have 177, we will say, 200 million diluted market cap, in which we have a max supply which is in circulation at 100, which is part of the decentralized infrastructure, therefore which can also be a narrative for the following year, and in which we are in a market cap which is less than 200 million. 200 million, that means that already 1 times 10, we are at 2 billion x 50, 10 billion. If your objective is really not to simply increase your risk and therefore to seek risk in order to really seek return, you should not buy BTC. You should not buy Ethereum. If your goal is really to purely and structurally generate returns, at that point you have to look for small market caps that have the capacity to evolve. At least 2 times 10 to maximize your winnings. Someone who will have a lot of capital will not take as much risk as you and will have a portfolio which will be much more conservative, which will be much less degenerative because precisely he has enough capital to generate enough return, enough earnings with the capital he has. So he can afford to have a lower return and therefore less risk and at the same time be able to structure more capital and therefore more gains behind. To give you an idea, you have coin market cap, which is very good. Just add a filter and put market cap here and actually enter the market caps that interest you. From 10 million, for example, to 500 million, you do apply. And it gives you a list of 900 cryptos, I think, something like that. We must be not far away, so 9 pages, 200 cryptos. So we are in many, many cryptos to analyze to see if it's interesting or not interesting how far we can go because it's the same principle. You have to understand that behind there is tokenomics which comes into account. Is it something that is deflationary, inflationary? Is there any real value in having this token? Does the token itself concentrate this value? How far does she concentrate it? How far can she go? And this is where, in fact, the notion of market cap and the notion of project analysis will be important. With everything I have just told you, you normally have all the keys. If, unfortunately, this is still not enough, don't forget that you have my investment strategy, which is made available free of charge in comments and descriptions. And if you want to go even further, there is training through the educational course, which is also made available free of charge thanks to funding from one of our partners, which allows you to have all the bases to do technical analysis, investment, trading, and manage the psychology of the bull run, because that is going to be really very complicated. And if you don't have time to analyze each of the cryptos and you don't want to miss good opportunities, we have a private group which allows you to have access to all the analyses that we carry out and to all the positions that we enter so that you have precisely the maximum information to take full advantage of this bull run. Everything is in comments and descriptions. And we will meet tomorrow to talk about something very important, which will be profit-taking. Many of you have asked me how to manage taking a profit, how far we can go, how to set that up. Because overall, the return you are going to make on the bull run, if you do not take a profit, you will not have any output. And that is really the key to success. I hope you liked this video. If so, don't forget to leave me a like and a comment. It always makes me very happy to read you. And we'll see you tomorrow, so on the profit-taking video.